What if there was a way for you to retire early and get paid to do nothing? Not just a little bit of money either, enough to where you could quit your job years before retirement age. This isn't a pipe dream, this is a math-based strategy that works if you play your cards right. But it takes work and you're gonna need money. This strategy takes time. This is not going to retire you overnight. This is a 30 years, 20 years, maybe even 10 years from watching this video strategy. But by the end of this video, you will know how much money you have to invest into the stock market every single day over a various amount of years to have dividends fund your lifestyle. To figure out the exact amount you need to retire, we need to find the exit number. The exit number is the exact dollar amount you have to have in your stock portfolio for it to fund your lifestyle. The first step on finding the exit number is figuring out how much you want to have coming in every single year when you retire. In the case of this video, we're going with $80,000 USD. This number is just the benchmark I'm going to be using in this video. It is arbitrary. Your number may be higher or lower. But the exit number for us has to be whatever stock portfolio number will pay us out $80,000 annually for the rest of our lives, also known as a perpetuity. Which brings in a concept known as the Rule of 25. The Rule of 25 is a very rough and dirty estimate on how much money you will need to save up to retire. The rule states that you should have 25 times your annual expenses, in our case this $80,000, in your stock portfolio. Without getting too technical on it, this assumption is based on the fact that if you pull out 4% of your portfolio on average, you can have that sustainably for the rest of your life and the principal will not move when factoring in inflation and stock market appreciation. Remember, the Rule of 25 is simply just a rough estimate and is due for variance. Using this rule very simply, we take our $80,000, multiply it by 25, and that brings us to $2 million. The math is simple enough, right? But let's talk about how we're going to get there, because that is a substantial number. This $2 million, or whatever it could be specifically for you, may seem discouraging, but with some math, I promise you it is easier to achieve than you might expect. Let me explain. So when you invest in stocks today, on average, based on stock market returns, if you're investing in a standard investment like the S&P 500, that will return about 10% a year. So every single year, the money that you put in is gaining 10% on paper. And in addition to that, the stocks that you own may pay out something called dividends. These dividends can be reinvested right back into the company when they're paid out, so you are actually earning free stock shares. So while you keep doing your daily investing in small increments, the stock is going up and the dividends are being paid out, meaning that your money is making more money at an increasingly faster rate every single year you're in the market. This might sound unreal to those who don't know, but for those who are familiar, you know what this power is. Of course, it is the power of compound interest and time in the market. But I still hear you, Josh, $80,000 a year, 2 million portfolio, what are you talking about? Well, I've got the math to prove it. I'm going to break down exactly how much you need to invest every single day to retire among various time horizons, or essentially how many years before you want to retire from watching this video. I'm going to offer 3 time horizons for you guys to look at, varying from 30 years, 20 years, and 10 years. Starting off with somebody who wants to retire in 30 years, the most realistic time horizon, which if you are a college-age individual just entering the workforce, that still puts you at a retirement age about 10 to 15 years earlier than most people. So if we're factoring in an average stock portfolio return of 10% with dividends, which I'm using a 2% annual dividend yield paid out quarterly for anyone who cares, you would need to invest approximately $18.48 every day to amass a $2 million portfolio in 30 years. $18.48 per day, or just about $600 a month, or $7,200 a year. For reference, a double steak Chipotle bowl is just about $20. So $18.48 every single day costs less than a lunch at Chipotle. This is the most manageable amount, and the reason this number will be so much lower than the next 2 time horizons we're gonna talk about is simply because you're in the market for an extra 10 years to 20 years more than the other time horizons. And this gives you a lot more time for that compound growth I was talking about, and these dividends to really start stacking and buying more shares of the company where you're not putting in nearly as much money and your money is working for you. It's an incredible thing, the dividend snowball, the compound growth. I have videos on my channel if you want to know more about those things. But let's say someone is really, really aggressive and wants to retire in 20 years from watching this video. Things will get substantially more aggressive. You're gonna have to invest a lot more money every single day than if you did a longer time horizon. Investments are great for sustaining wealth and eventually building wealth over time, but you have to put in so much footwork of your own capital for so many years that honestly, they're better at preserving wealth and then paying you off later in life, which is exactly what I'm talking about in this video. Okay, so let's ramp it up for those of you who are more aggressive, the more entrepreneurial, that you have a lot of extra income. If your time horizon looks like 20 years, and assuming the same 10% dividend yield, all that, you would need to invest approximately $65.63 every single day for 20 years to reach your investment goal. That's about $2,000 a month or $24,000 annually that you're gonna have to invest to reach $2 million. $65 every single day does get into the area where it is a little bit harder to invest that single amount every single day unless you are really in a position where you have that much disposable income. It's gonna take a lot of discipline to have $2,000 of disposable income that you wanna invest every single month though, especially to do that for 20 years. But if you can do that, then it is statistically probable that you would have a $2 million portfolio 20 years from today. For reference, $65, almost $66 every day is the price of like a brand new video game nowadays, a nice dinner for two, or a pretty nice piece of clothing. So with 20 years being the absolute minimum time horizon I would consider for somebody whose standard path looks like college educated or not, trying to work their way up the ladder in a corporate position or things like that. For the average earner, I would say this is the absolute minimum you could do in terms of time horizon, just due to the fact that you have to find an extra $24,000 a year, which is extremely uncommon. And it's gonna take a lot of discipline and diligence. Unless you are an extremely high earner with very low overhead, this is really where you're going to stop. For those of you who do want to know, just for reference on time horizons and time in the market to show how much of a difference it makes, let's look at 10 years. So I'm just gonna say right now, to amass $2 million in a stock portfolio over the course of 10 years is extremely unlikely. And while mathematically it is completely possible, you are going to have to find an insane amount of money, and anyone who amasses a $2 million stock portfolio in this amount of time is probably not doing it by just daily investment. With a time horizon of 10 years, you're going to need to invest approximately $283.63 every single day for 10 years to reach a $2 million stock portfolio. That's just about $8,500 a month, or just over 6 figures in the market every single year, which that amount to invest is insane. But the reason I give you this information for such a crazy short time horizon shows you how much you have to invest of your own money. With 10 years, you're going to have to fund just over $1 million of that portfolio with your own earnings. Whereas if we now look back at the 30-year timeline, you're going to have to fund $7,200 a year, or just about $216,000 over the course of 30 years. It cannot be understated how important time in the market is for growing a stock portfolio. While it is technically possible to do something like 10 years, you have to be under the perfect set of circumstances, and the 30-year timeline is going to be extremely realistic for most people. Even if you work a part-time job where you make $20 an hour, you only have to work 7 hours a week to fund that portfolio for the week, which is a lot less than most working age individuals are working. So now that we have our time horizons, we have our $2 million, you can reliably pull out $80,000 a year, and inflation and stock market returns will not impact the principal underneath in a normal market condition, which market conditions are always subject to change. But there's potential that once you have this $2 million portfolio, you could then pivot it into different securities that can yield you higher than just 4%. Key takeaways: $20 a day for 30 years will net you $2 million, where $65 a day in 20 years will net you the same, or almost $300 every single day if you want to accumulate $2 million in 10 years. The earlier you start, the less money you're going to need, and that's the magic of compound growth. Your money's going to be working for you and not the other way around. But I do want to make a note for a lot of the young, ambitious people that are watching this. Make sure to invest in yourself before the stock market. And I know that's kind of a common trope, but buying things like books to expand your learning, paying for a gym membership to exercise and better yourself, or occasionally buying yourself something nice will take you a lot further than investing that extra $5 or $10 every single day if it comes to the cost at you not being able to enjoy life. Focusing too much on the day-to-day price of your stock portfolio will do nothing but hurt you. I'm going to attach a link to a website in the description where you can do the math for yourself if you want to customize the numbers, the returns, the annual percents, all of that. None of this was investment advice, just investment theory. I challenge y'all to comment your time horizons and exactly how much you need to be investing to meet them. If you want to know more about getting paid in the stock market with dividends, make sure to click on this video right here. And subscribe if you like money. Thanks, guys.